Banks, the commercial banks in the country, have been forced to a hasty retreat following last weekend's misstep by Sidian Bank in an attempt to review lending rates upwards. Faizal Ahmed has more.
It took a spirited effort by Sidian Bank Chairman James Moria to attempt to defuse the tension. The board, departing from MD Chege Thumbi's internal memo that has set out new loan rates barely hours even before the ink dried on President Uhuru Kenyatta's assent on the Finance Bill 2019. While several banks had initiated the process to review their rates, the backlash received by Sidian Bank could have forced them to retreat, albeit temporarily.
Look at historically, the last 3 years, they have been capped at certain levels, previously at 13%, and you find banks, because they have no option, some of the customers who they'd otherwise lend to at 14%, 15, 16, they have been forced to fit them within the 13% price range. So you might find some of those loans being revised upwards if banks find a loophole in that amendment.
Hours after the National Assembly failed to turn over President Kenyatta's memorandum seeking to repeal Section 33B of the Banking Act, the lenders came out to assure the markets of their good intentions.
That the banks are going to be back then. Remember, the environment also was different. I'm not sure whether you look at some elements, because price points for banks is not just banks deciding. Then the government borrowing rate at that time, I remember we were paying treasury rates at 20% in 2015. Most of your inflation was almost reaching a double digit, if you remember then. So there's a little bit element that determines what the price of credit is.
Even with this promise, industry analysts point out that the ambiguity in the Finance Act gives banks the leeway to charge rates as they wish.
For the existing loans, there's still some uncertainty. The MPs drafted a bill, and the consequence of that was that the existing loans should remain where they are, but that bill is quite vague. In my opinion, it's poorly written.
And when there is a lot of money in supply, automatically the interest rates will go low. But that is an assumption that we are dealing with normal banks, that we are dealing with banks whose activities are determined by market forces. But that is not what we have in Kenya. We will have to kill the cartel characteristics of our banks.
Despite their promises, this could be an indicator that banks would revert back to their high interest rate charging regimes, stifling the SMEs of the much-needed credit. Faizal Ahmed, Citizen TV.